This particular candle over here is called a dragonfly, and it clearly indicates indecision in the market. Once you get this particular type of movement and you don't take a trade yet, this is clearly telling you that there's a battle going on between the buyers and the sellers. What you need is to wait for a green candle to close above this particular candle over here. Now once you get this green candle, you can go ahead and place a buy on this particular zone. Put your stop loss below this particular consolidation here and target wherever you want to target for your take profit, and boom, price should start moving in that direction and you should exit the market once it gets to your take profit. Its picker candle has a wick and a body. This part here represents the body of the candle, while this part here represents the wick of the candle. Now consider the wick as the weakness in that particular candle. Now for a green candle, price opened in this particular price here, and immediately price opened, sellers pushed the price down to this low over here, and buyers take over the market and pushed price down to this high over here, and sellers came back and pushed price down to this place, and here we have the close of this particular candle. The major difference between the green candle and the red candle is the open and the close price. The high and the low here remains the same. Candlestick over here is called an inverted hammer, so price was actually trending downward, and this would be our open of this particular candle. There were more buyers on this particular support, so price pushed to this particular high over here, and immediately sellers pushed the price down to this place, but it still closed as a bullish candle. This is also indicating that market is actually trending upward. I wouldn't get into the trade immediately I have this particular type of candle. I would expect a new green candle like this before I get into the trade, because we had this sell. That still shows that there's presence of sellers in this market and they're actually strong. So I need a new green candle here indicating that the buyers are actually stronger than the sellers. Once you get this particular green candle here, you can go ahead and place an entry here and put your stop loss below the consolidation over here, and the price should actually move upward to your take profit. The candle over here is called an hammer and is acting on a support. The support is a zone in the market where you should expect more buyers than sellers. Coupled with the fact that we have this particular candle is a clear indication that markets might actually reverse in the opposite direction. So what you need to do is to just go ahead and place a buy immediately after the close of this particular candle. Put your stop loss below this particular support zone here and put your take profit wherever you want to put your take profit, maybe the next resistance, and you should expect the market to start moving in a series of higher highs, higher low, higher highs, higher low, until it gets to your take profit. The candlestick over here represents a spinning top. The price opened on this particular zone here, and immediately after the open of this particular candle here, the sellers pushed the price to this particular support, and immediately price got to the support, it tapped into more buyers and buyers pushed the price to this particular high over here. So this will be the high of this particular spinning top, and after much struggle the candle closed on this particular zone here. Now immediately after you get this, go ahead and place a trade. Put your stop loss below the candlestick and put your take profit on the next resistance or wherever you're setting your take profit to be. Now the price should start moving in a series of higher high until it gets to your take profit, and boom, this particular candle here represents a piercing line. Once we had the close of this red candle, instead of the green candle to open on the same line where we had the red candle, the green candle opened below the red candle. So this was the open of the green candle, and we had the sell over here. Immediately had the sell here, buyers pushed the price to this high over here, and immediately we had a close of this candle here. There are two ways to trade this. Either you jump into the market once you have the close over here, or you wait for price to print another candle in this manner. Now once you have this green candle, you can go ahead and take your entry and put your stop loss below the consolidation over here and target wherever you want to target for your take profit. Once you do that, you should expect a bullish movement in the market to your take profit. The combination of candlestick over here represents a morning star. Now we had this red candle, and immediately after the red candle we had this particular indecision in the markets. So this is a common doji candle. Price opened and closed at the same point. So immediately after the close of this price, we had the green candle, and that's a confirmation. This particular candle here represents a bullish engulfing candle. Price actually opened on this particular place immediately after the close of this candle, and it went to the support. Immediately it got to the support, there were more buyers on this particular support, and they pushed the price up to this particular zone here, and we had this particular close here. This green candle engulfed the whole of the red candle here. So that's the strong signal indicating that there are more buyers on this particular zone than the sellers on this zone here. What you need to do once you get this signal is to just go ahead and take your entry immediately after the signal. Put your stop loss below the support zone and target wherever you want to target for your take profit, and you should expect movement in series of higher highs, higher low. Combination of these three candles over here is called three white soldiers. To identify this candle, the previous candle must be smaller compared to the next candle, and this must be smaller compared to this particular candle. This is a clear indication that price has actually changed direction. Once you begin to get this type of move, go ahead and take a buy immediately after the clear candle. Put your stop loss below the support zone and target wherever you want to target for your take profits. Once you do that, expect the market to start moving in a series of higher highs and higher low until you get to your take profits. And that will be all about the best candlestick you need for bullish reversal. Now let's proceed to bearish reversals.